Good evening, everyone. My name is Jen Hicks. I am the Director of Communications and Outreach with Maine Woodland Owners. We are a member organization that provides advisement and support for small woodland owners in Maine. And tonight, one of our benefits of a membership and support of the public is providing these very informative programs, such as the one tonight, understanding or figuring out your timber tax realities with Jim Norris, who is a very dedicated volunteer member of ours and is also a retired forester and IRS agent or IRS employee forester. And he has often, almost every year that I've been working with Maine Woodland Owners, has offered his time to present information about figuring out your timber tax process. If you've done any sort of timber harvest and you have earned a little money from that process, you'll have to pay some taxes or maybe not, and figuring out how to do your taxes with that is Jim's specialty. So we're really lucky to have Jim tonight. And he's going to be providing a lot of good concrete information. He's also going to will have documents that he will go through that will then will be shared with this group and anybody else who watches this video after the program is over. So you'll have actual items to work with and some templates that will help you get through your tax process. So if I'm hoping everybody's a member here. If not, I encourage anybody to become a member of Maine Woodland Owners. Just visit our website, mainewoodlandowners.org, and click on membership. And an annual membership gives you a monthly newsletter and early notification of these types of programs, among other things. So we're happy to have anybody join us and see if they see there's a benefit. I'm going to pass the mic over to Jim. Apologies ahead of time. I'm going to be signing off a little earlier than the program because of an obligation I have at 6:30. But you're in good hands with Jim. And also, I think Jim and I were talking about how we'd like to hear from this group about maybe what you're dealing with right now around timber taxes, anything specific that you have going on in your woods that might need some more clarification around your taxes. So please, this is a very interactive program and Jim will have a nice presentation, but at any point, if you have any questions, you can raise your hand and unmute yourself and jump in and ask your question. Also, if you've opened your chat box, which you can do by mousing at the bottom of your video screen, clicking on chat, at the bottom right corner of your screen, you'll have the box to tap a chat in. You type in your message there and I'll keep monitoring that and letting Jim know if there's any questions from there. So please feel free to ask what you need, get what you need tonight. And very glad to have Jim Norris. Thank you very much, Jim.
Okay, hi folks. As Jennifer said, I'm a very strong supporter of Maine Woodland Owners. If you're not a member, I sure do encourage it for a whole bunch of reasons. The least of which is a great newsletter, but there's a lot of behind the scenes work that Tom Doak and staff do to make us all better informed and look out for our interests. So, you know, certainly encourage membership. One disclaimer, I'm usually a Zoom participant, not a Zoom presenter. I do this once or twice a year, and fortunately Jennifer is right there to assist. So bear with me if there's some administrative matters involved with operating the Zoom features. We will get through it. I hope that you can adjust your sound. I'm not a wallflower. I tend to, if I start speaking a little too loud, let me know in the chat mode or just interrupt me. There are all kinds of options associated with this, and like I said, I hope they go right. I'm a licensed forester, actually number 37 from the very beginning of the licensed forester process. But I am a tax forester, not a management forester, and I'm speaking to the things that I know here. I'm a little fuzzy when it comes to forest management plans. I worked for the IRS for 31 years, doing all sorts of natural resource valuation work, providing assistance to IRS agents in examining especially natural resource related issues. Generally speaking, most of my time was with large corporate forest owners, doing a host of issues that don't always present themselves with small woodlot owners. So over the 7 years that I've been retired, I've really picked up on a lot. I do have my own woodlot that I've operated on for 38 years. Took my kids to Disney World, replaced all the windows in my house, and refinanced my mortgage with my woodlot. So I think most of you probably are well aware that with timber sales, incomes available. My goal is to make sure that you take full advantage of determining the correct tax liability for any timber sale. And as you'll see, I'll spend some time regarding whether or not you choose to become a business owner, or if you're, like most of us, you're an investor with casual, infrequent timber sales, still hoping that you're going to realize some income, but not having the size and availability of funds to operate on a large scale. So, that'll be the focus. And so with that, if anybody has any questions before I open my PowerPoint, please speak now. So I'm gonna, all right, let's see here. I think I can. All right, so I've got to move a little something there. As you can see, I've got a little, let me do a full screen here.
You have to go to slideshow. You see the,
Well,
yep, click on that, and then from beginning.
there we go. Thank you, Jennifer.
Sure.
All right. I will, yeah. It's important for me to point out that a lot of the text in my PowerPoint and some of the examples were taken from the United States Forest Service's publication called Landowner's Guide to the Federal Income Tax. It's Ag Handbook 731. You can get that document if you choose from the government printing office, but it's the link that you see there, timbertax.org, is a timber tax website maintained by generally some college professors and folks at the U.S. Forest Service that try to keep everybody up to date. And this particular publication I find excellent, even used it when I was working on actual examinations. So I think it's easy to read. It's got a lot of examples, and there are some useful bits in it. So when we look at timber tax, we kind of have to look at what kind of a forest ownership is it, and how do you operate? The purpose of holding the timber, whether or not it's just for personal use or investment, or you're actually attempting or already involved as a business. It could be one of your businesses. It doesn't have to be your sole source of income. Generally speaking, most of us fall in the investment category. Personal use is just what it says. You've got a piece of property and you do your everyday living there. Generally speaking, personal use involves very small parcels. The larger the parcel, the easier it is to consider yourself an investor. And we'll kind of get in that. The screen says, if you manage your forest property to realize a profit someday, as I said, over the 38 years, I've harvested timber on my property 3 times with commercial operations. But I've also cut firewood and, done all sorts of trails, and I hunt on it. I actually can fish, but it's not a major source of my income, but it's been a great investment. And, looking back on it, I feel very fortunate that that's the case. And I suspect that most of you do as well. That's in contrast to having the property as a business. As I said earlier, it may be, you may have multiple businesses, but you generally entered into this as primarily to make a profit. Your activity is more regular, more intense. You generally have much more costs and expenses associated with it. But you also have far more regular activity. And generally speaking, in order to really work as a business, you need a more substantial woodlot. I mean, 100, 200 acres at least, to show some steady income and to show that you actually are working as a business, not necessarily a hobby, if you will. My woodlot is my hobby, one of many, but it's not a business. There are a lot of cost considerations associated with managing a woodlot and making sure that you proceed through the process of ownership and eventual sale and realizing some income. Notably, you have capital costs like the cost of acquiring the property. There may be some deductible expenditures depending on the nature of those expenditures and how you operate. There are also costs of sale, like if you hire a forester to oversee the operation, or you likely pay a commission, and therefore that is a cost of making the sale and would be a deductible against the proceeds of the sale to reduce your gain. There's probably the most difficult part of the whole process is determining your original and adjusted cost basis that you're going to apply against the timber sale. You may have other assets, purchased assets, where that purchase price becomes your cost basis. I'm going to get into a little more detail. You could inherit property, you could receive it by gift, and allocating that original cost basis. If your property is just a woodlot, it's a whole lot easier than if your property has multiple assets like homes and fields and water frontage. Each time you add one of those, you've got to make some determinations about what what part of your total cost is the cost in timber as opposed to all the other assets. Capital costs, the term capital is inherent in this process. Those are usually not deducted from income because they're establishing assets. And properly recording those is a capitalization process. As I said earlier, I'm a forester that works for the IRS. I was not an IRS agent. I fortunately learned much of the accounting side, but if there are accountants on board, bear with me. My work was somewhat narrow. I already had talked about, if you spent money to acquire your land and timber, equipment, or other improvements like, my finger slipped here, other improvements like culverts and bridges and roads. As you can see here, land itself is a non-depreciable asset. You have timber, got buildings, potentially equipment. As I said earlier, these are the kinds of things that are capital costs that are associated with owning and managing a woodlot, whether you do the management yourself or you need to hire people to do it. As you can see, most of these are original, you build a bridge in it, have it built in it. You've established an asset, you've established a road, you tree planting. If you make major repairs rather than annual maintenance costs to some of these assets, they generally speaking would be considered capital costs. Costs associated with the purchase of timber are capital expenditures. Generally, you don't acquire timber without acquiring other assets like timberland and other property that's assets that's included in the parcel or groups of parcels you acquire. Most of us don't do very little tree planting and seeding in Maine now. Matter of fact, there never has been a lot, simply because our growing season's so slow. It doesn't appear to be profitable to plant a lot of trees and expect to realize income from them unless you have a real substantial piece of property. It's pretty common in the South and out West. The original cost of a purchase capital asset is its total cost. It's important to remember that there are other costs associated with establishing your total cost in your capital asset, like legal fees. Legal fees in particular, if you're responsible for closing costs, it could vary depending on the size of your property and the nature in which you undergo the operations. Inherited assets I'm going to point out a real important distinction between an inherited asset and a gifted asset. The original basis of inherited property is the fair market value. And so, if you inherit a piece of property today, you need to determine what the fair market value, willing buyer, willing seller, neither under any compulsion to buy or sell, is for the property, and you need to allocate that price amongst the assets if there are some. Generally, it's as of the date of the decedent. Assets received by a gift are the donor's adjusted basis. So if somebody gives you, a lot of people obviously want to make donations or gifts to their heirs and others prior to passing on. Their adjusted basis becomes your basis as of the date of the gift. And something, as you might well suspect, many of those were many years ago and could actually be, you know, a gift at that time and then regifted in the family. So your cost basis is in those situations is generally pretty small compared to perhaps the sale. Here's the real kicker for all of us. If you're in the process of making a timber sale and you have not made any attempt to determine your cost basis in the timber, it's been my experience dealing with small landowners and small tax preparers. They're kind of lost when it comes to this, and many small preparers say, I have no idea. You know, you bought it 20 years ago. I don't know, you know, that's not my job. And so they might not do an good allocation of your cost basis, and you would be missing out on potentially claiming cost basis in a reasonable fashion when you do finally make a sale. But this is not always easy, you know, because here's a bunch of assets that are likely involved, and we're most concerned with, you know, the timber asset because we can recover our costs in timber on a pro rata basis as we sell timber. And I'll get into the real nitty gritty of that. But we do have to assign value to the land, whether the land is timberland, it's fields, it's swamps, it could be shore frontage. There might be some depreciable land improvements. There's not a lot. You know, I think of when a depreciable land improvement is when you've done something to change the layout of the land, whether it's elevation or slope or whatever, like a parking area. I'm sorry, I'm fooling around with my mouse here, and your equipment accounts. And the equipment accounts are only as real significant if in fact you intend to follow through in describing your activity as a business. You know, as I said earlier, it's the land, and a lot of non-depreciable land improvements are associated with a purchase. If there's a forest road or a road on the property when you buy it, the cost you assign to that road becomes the cost basis, and it's not recovered until you sell the land. Otherwise, roads are most notable when we're looking at a non-depreciable land improvement. The all-important timber account, you know, the IRS code provides for the recovery of your costs in timber when it becomes merchantable, or if it's merchantable. through a process most describe as depletion. This is contrasted with depreciation. Most of you are probably familiar with, your car depreciates, your home, a business property depreciates, equipment depreciates, and if you're turning around to sell it or trade it, there's some sort of depreciable value associated with it that you either can sell it for or trade towards something else. But we need, for the purposes of making the timber sale, make sure we know what the volume and value of merchantable timber is on our property. So the timber account, many times we have to establish this merchantable timber account retrospectively. Most of us didn't know when we bought the property, maybe not even what we had for timber, and didn't have a timber inventory and had no idea how to guess or try to make a reasonable estimate. But once it's done, if you hired a forester or you had some experience, you got to be able to quantify it in a volume measurement. Historically, cords was a very common practice. It's some wood that's 4 feet wide, 4 feet high, and 8 feet long, 128 cubic feet. We're getting away from that quite a bit, other than, firewood. Perhaps if you go out and buy a cord of firewood, you don't buy it by the ton, you buy it by a cord. Saw timber, the more valuable product that we're going to make a sale for, that you have on your property, bigger, has a more valuable use towards everything from furniture to sheathing to whatever. When it's harvested, it's generally measured in 1,000 board feet, as opposed to a board foot, which is 12 by 12 by 1 inch slice of wood. More and more, we're seeing wood purchased or sold in tons. It's quite a bit more simpler if, in fact, you have the ability to get weight scales. It's a little hard to do when, obviously, in the woods. It's generally done at the final destination of the wood, at a mill, sawmill or pulp mill or whatever. Many times, depending on how you choose to account for your wood, you may need to convert a conversion to a lowest common denominator. I'll show you a screen with some, but generally speaking, a cord of wood weighs anywhere from 4.1 to 4.7 tons, and a 1,000 board feet is generally 5 cords. It varies a lot whether the wood is cut in the middle of the winter when things are dry, or the summer when there's high moisture content. Mills do a good job adjusting their prices for whether or not they're getting wood depending on when it was cut. I have some examples of why we had to do it on some coming up. All right, I'm going to skip over operating expenses and carrying charges, in part because I'm assuming that most of you are here as investors and are not attempting to file a Schedule C where you can expense certain types of costs against your income from timber. It's a, distinguishing between your hobby and your business. I mean, the world's full of it. People who train dogs, people who enjoy their property and have a Kubota four-wheel drive tractor to bush hog their field, maybe move a little snow and so forth. But, generally speaking, if you're in the business, you expend a lot of cost to further the business assets. So, if somebody really wants to get into detail with this, they can contact me and I'll spend more time with it. But I'm going to focus primarily on making everything associated with making a timber sale. The forest management expenses, if you're in the business, a lot of your expenses are deductible. And if in fact you have no income, they become losses, and losses that can be carried forward into subsequent tax years for you to potentially deduct against income at that time. If you're a real passive business, and passive means you do very little in the business, perhaps other than writing a check for property taxes or something like that, there are some significant restrictions, and Congress dealt with this for forest landowners, but for businesses in general, where people had rental properties and did nothing and were taking substantial business expenses from their passive activity against, they might be high wealth individuals, people with significant incomes. So there are generally some rules that limit that. We have some creative people out there. The area that if you itemize your deductions, and I'm assuming most of you have filed tax returns over the years, and like me, when your kids were young, you had all sorts of costs, whether they're medical or charitable contributions or taxes that were deductible on a Schedule A, and you had to have a sufficient amount of them to oversee a standard deduction, which many of us now are required to do. But if you are able to file a Schedule A and you have a property as an investment, if the management expenses that are associated with forest management exceed 2% of your adjusted gross income, that's the number that's on the bottom line of the first page of a 1040, the excess can actually be considered a deduction on your Schedule A of itemized deductions. If you're filing a Schedule C as a business, obviously you can deduct them in full. Many of these costs, a lot of these costs, as you can see here, you may be able to add to your basic expenses subject to that restriction and recover them when you sell the timber. So that if, if you had $1,500 worth of expenses and your 2% was $1,000, you could in fact capitalize $500 of those expenses into your timber capital account and recover them when you actually sell the timber. I hope that's not too confusing. Tends to require quite a substantial cost to exceed, that 2%. On the income side, as you can see, there are timber sale receipts that are involved. You'll end up getting a 1099, hopefully a 1099-S from the buyer for the gross proceeds of that sale. Determining the amount of gain and loss, what your cost basis is, cost of sale, what your adjusted basis, and how you can mechanically recover that basis. If you sell standing timber, i.e. stumpage, and it's yours until the timber is harvested, i.e. when it falls down, it's no longer your problem, no longer yours, and you're going to get paid based on generally a contract with a logger or a forester or someone based on the value or volume of that standing tree as it goes down. You might end up having a 631A sale. Thanks to an accountant who was on my earlier session, I really didn't spend much time with this, but what's happening in the industry now is a situation where many of the more substantial forestry consulting firms are acting as an agent for the landowner. They believe they can generate a greater net income to you by finding somebody to cut your timber, somebody to haul the timber to some manufacturing facility or some log yard, and somebody who's going to pay you the best possible price for your wood. So when that happens, the tree being cut is a capital gain. Any value, the gain from your cost basis to compared to the sales price, and in this case, a hypothetical sale because it never actually occurs. There's stumpage information out there. The difference between those two becomes a capital gain. And there are very favorable tax rates, and matter of fact, some of that income may be excluded depending on your tax status. And any value added from that point on, that hypothetical value becomes your cost basis, and your gross proceeds is what you got for that wood at a mill, and then you're allowed to deduct the cost of commission of a forester, the cost of harvesting and selling. It's not real common to operate that way now, but we're seeing more of it, and it produces some complications in proper reporting. But as I said, I think still by far and away the majority of the timber sales are the disposal of standing timber, or standing timber being stumpage. Depending on how long you've owned the property, the timber, why you own it, how you sold it, and what kind of timber activities you relate to, could impact on whether your gain or loss is capital or ordinary. Costs of sales, most notable here are fees paid consulting foresters. But there may very well be a number of other costs. Most of them, timber cruising, advertising, marking and scaling could be an important cost. Some foresters charge fees separately for marking and scaling timber than overseeing the timber harvest operation and making sure that you get all the income that's coming you, and them having a presence at the site. One of the things that I didn't have here were, there are times when you might even need some sort of survey to make sure that the timber harvesting on your property, you don't cut timber on somebody else's property and run into all sorts of complications. Not all loggers are real careful unless that boundary line's clear. You might have to actually construct some roads to get to certain parts of your property. If that road is made just to get to the timber, it becomes a cost of making that sale. If you're going to use that road beyond the timber harvest period, it becomes a capital asset. Maybe some of it's depreciable if you're a business, but generally becomes a non-depreciable land improvement that you recover the cost when you sell. I'm rattling on here. Nobody's stopped me, so I'm assuming I haven't gone way too fast for you.
Jim, maybe you can ask, maybe we should ask, anybody want to share a little bit of what they are, what maybe their situation is, just for context?
So Jim, this is Richard.
Yeah.
We had a timber harvest in about 2013-14, and then received a big assistance from the Natural Resources Conservation Service, built a bridge,
Yeah.
moved some roads, for which they helped pay. It was a cost share kind of a thing.
Yeah. If you notice my screen, I was just coming to that, but
Okay, I can wait. So my question is going to be about the bridge. It's the steel bridge, the skidder bridge.
Yeah.
So I can wait when you get to it.
well, it's a good segue perhaps into it. I was not going to spend an inordinate amount of time talking about the NRCS and other cost-sharing processes that are programs that are available. Richard, being a knowledgeable landowner, was able to take full advantage of some of those cost-sharing programs that the federal government gets involved with, and hopefully all those programs, generally speaking, further sound forest management and, help the industry. Many times, depending on the circumstance, those government cost share programs may be excludable from income. And there's a fairly difficult, antiquated process to determine just how much. If you got payments from NRCS or some other government, state or federal government program that deals with conservation, you'll get a 1099-G, and you've got to make a decision about whether you're going to try to exclude that from your income, or if in fact you're going to add it to your cost basis in the timber and other assets. Because Richard's described a bridge, which would be a depreciable land asset if he's in a business or he files. But I think that in terms of the mechanics of which one, lots and lots of people, especially on less significant costs, I'm sure that was many thousands of dollars, as opposed to, a few hundred or whatever for some of the less significant cost-sharing ventures. And I'm going to kind of short circuit it, other than telling you that it could be one of those. And I'll have a personal conversation with you, Richard, where I can really get into detail, but there's a whole bunch of these that exist. You can see it on the screen. It's a special provision in the IRS code, and so I'm going to kind of jump over that. I've been talking with NRCS about doing a couple Zoom presentations on just those NRCS payments. I think we could spend a whole program, several hours here talking about them. And so if you'll bear with me, I'm going to move on to what I think are more significant issues for those of us, for those of you who are either involved with a current sale of timber or anticipate something in the near future. Most people, if they have made timber sales, are familiar with a Form 1099. There are all kinds of different 1099s depending on what it is. The sale of timber, if you sell timber to a logger or you sell timber directly to a mill, the buyer is required to send you a 1099-S for the gross proceeds of that purchase. Lots of times that you don't always see the gross proceeds, and it hasn't been a major problem, but you might see a net proceeds after the forester has taken his commission and so forth. But it's real important that if you make that timber sale, that you get a 1099-S, because the big IRS computer somewhere has where the buyer of that has filed his sources of expenses, and the government computer can match that so that if you got a 1099-S and you didn't report that income with your return, it's a pretty simple process for the IRS to find that out. I mean, there's millions and millions and millions of 1099s submitted. And as you might suspect, my guess is, generally speaking, the IRS works their way down. A $5 million 1099 versus a $5,000 1099 are not going to get the same consideration. And I think it's, only logical that that's the case. Now, one problem we have had routinely, seems to be getting better. There's a 1099 miscellaneous. And a 1099 miscellaneous is payment for services rendered. So, and it's miscellaneous income. If the IRS, if the standing timber income is reported as 1099 miscellaneous, the IRS thinks it's ordinary income. as opposed to capital gain income. And it could prove problematic. Seen lots and lots of situations where small preparers who don't deal with timber sales very often mistakenly or loggers, some loggers and so forth, give you a 1099 miscellaneous. And it's up to you, generally speaking, to try to get them to rectify that and make sure that you have a 1099 miscellaneous S, and that the government, the IRS, realizes that. You know, before we get into the what I guess I would call record keeping systems, it's only common sense that you keep as good a records as is possible. But remember that not all taxpayers are the same. The kind of income you get, the size of your property, the frequency of sales may not be a good situation for you to keep incredibly detailed records to substantiate. And generally speaking, when it comes to timber, I think there's a bit of a cushion when the IRS, because they're not terribly familiar with the kinds of income and expenses associated with selling timber. And I said earlier, one real significant feature, you can look at the tax rates for ordinary income and for long-term capital gains. Long-term capital gains are generally capped at 15%. And matter of fact, if you're in the two lowest tax brackets, your capital gains get taxed at 0. So it's really important that you describe the timber sale as a capital sale, and you make sure that you have the sufficient, the allowable costs and expenses associated with making that capital gain, because it will be a substantial benefit as opposed to your ordinary income. I deal with a lot of retired people who don't, aren't dealing with six-figure incomes, and it doesn't become as big a problem. Now, if you can see this, I tried to highlight it, but if you're a married couple filing jointly and your adjusted gross income doesn't exceed $83,380 for 2022, the tax on your capital gain is 0. And if in fact, if you follow to the 15% rate, if you have $100,000 in income, adjusted income, 83.38% of that capital gain you have, not your total income, but the capital gain, would be taxed at 0, and the balance would be taxed at the next lowest capital gain rate, i.e. 15%. So your weighted average tax rate on that capital gain could be 4 or 5% or more, as opposed to ordinary income rates. Obviously lots and lots of people don't find themselves exceeding the 83,000, but it's important to point out that you still have that benefit, a prorated benefit on your capital gain if your income is greater than $83,380. And it's half of that if you're filing single. So this is a real important piece. And there's if you file a tax return by hand, a paper copy, there's a capital gain worksheet that you have to complete, which will allow you to mechanically undergo that process to determine how much, and you end up with a blended tax rate when you determining your final tax. So any questions there? Does this sound a little confusing? It's a real important piece, and I get a lot of calls from people wondering if I can, if I want to provide some timber tax services. And this is one of the very first things I do, and ask them about their adjusted gross income, because and that adjusted gross income is including the capital gain. I would say that, upwards to half of them, that's the game's over. They don't become a client. They're aware that the capital gain is likely to be excluded in part, total or in part, and my services are no longer necessary, but they need to be reminded that this exists, and it will be important when you're doing your return. If those of you who I use TurboTax, do mine and some family, relations, and remember that the software like TurboTax, TaxAct, TaxSlayer, and so on do all of this for you, and you won't actually see the mechanics. Hopefully, one of the attachments that they'll provide to you will show clearly show that you got the benefit of that capital gain, but you got to keep an eye out. And also, going back to the 1099s, a lot of the tax services just ask you if you got 1099s. They didn't say, was it a miscellaneous or was it an S? And it's important for you to add that detail. A couple of them now are being a little more thorough, but that can get lost in the wash. So, as I said earlier, the sale of stumpage or standing timber, which is an investment, receives the benefit of capital gains treatment. The sale of standing logs that were cut but not sold at that also can get capital gain treatment. But you have to make a claim that it's 631A income. I'm sorry that this is complicated, but it's, I think it was generated because many timber industries were integrated. They had manufacturing facilities and they had timberland. So all their wood was generally going to their mill. And so they were having to determine a hypothetical sale at the stump. 1986, Congress did away with that for corporate taxpayers. Property taxes, as I said earlier, you may be able to deduct them on a Schedule A if you itemize deductions, but if you prorate the portion of your property tax that's attributable to timber, you can capitalize it uh, into your merchantable timber account and recover part of it. So the next piece, and we're about halfway through here, is the Form T. I'm going to take a break. I just remind everybody it is after 5 if you need to take this break for some refreshment. But I'll be back I'm going to take about a 5-minute break and I'll be back. I'm not going to turn anything off. You're going to just see my bookcase behind me. So, and I'm going to mute my
Jim?
while I'm waiting for the 5-minute or whatever break is, does anybody have anything they'd like to either add or ask a question of that kind of is more directly related to your property, not to everybody's? Okay.
Jim, can I ask you a question now or?
Oh, sure.
All right, so I just ran downstairs to check my 1099 from a small timber sale we did last winter. And thank goodness it was a 1099-S.
Yes.
Your explanation has just made this 2 hours well worth it at that point. So
Well,
anyway, thank you.
well, it's a very routine mistake, and many of the small text preparers, mom and pop stuff, may not, they're used to seeing a 1099 miscellaneous, and they don't see a lot of 1099-S's, and more importantly, they very rarely see timber sales, period. In timber sales, small forest landowners are a very, very small segment of the public, and we're an even smaller when it comes to, selling timber, because we don't do it very often. So a lot of these preparers have never even seen it, and
I'm
they
in
don't.
a worse situation because I've always done my own.
Yeah.
And so it even makes it more hit or miss or difficult. I mean, on this 1099-S, should I be looking for other deductions in this capital gains schedule that's on my 1040?
Yeah.
So,
because you end up, as I'll talk more about it, but you end up reporting a capital gain on a Schedule D.
yeah.
You accumulate capital gains and losses, and then you report them under the capital gain provision and make sure that you get the full benefit. Once you've added that there, do you use a software, or do you do it?
No, I'm right on a piece of paper on the forms that I print off from the IRS site. So it all goes in on paper. Wait, I'm like in the dark ages.
Well, there are some real handy reasons to use some of the tax software. I like it because it asks me every single question, and when I'm all done, I get a beautiful printout. There's no scribbling, no crossing out. I get an electronic file as well as a print out a hard copy. It's worth every penny for me. $40. And my stuff now is not I don't have college expenses and
right.
Any of those kinds of things to deduct. It's not a real close call, to be honest with you, but
I'm probably in the same ballpark because the standard deduction now is substantial, and I can't come anywhere close to it. I mean, the mortgage is paid. There's no deductions anymore.
Yeah. Well, I mean, that's intentional on their part.
Yeah.
It saves a lot. And of course, as you know, a lot of people don't pay any taxes, period. Low income and creative people. So anyway, I'm a big fan of the commercial software like TurboTax, and it keeps historic records for you. And
yeah.
I like having an electronic file that I can turn to. It automatically compares, the last few years with your current year to see what did you take last year, and make sure you deal with it. So
anyway, thank you.
Okay, I'm gonna start again. I'm assuming everybody's on board. I'm having trouble with my mouse here. Okay. A Form T is what the IRS calls an information report. It's not required, but as you'll see, it answers all the questions, almost all the questions the IRS might have if in fact they're looking to do some sort of examination. But it also gives you a great great record of what you did and the ability the next time you make a sale for it to be that much easier. I'm going to stop sharing and start another let's see. I thought I downloaded the actual IRS form. So I'm going to go back to all right, I'm going to share a screen now of an think I am. Let's see, where's
Did you unshare? You got to unshare first.
yeah,
You know how to do that? At the top of your screen,
I
there's something that says stop sharing.
don't see it. Is it under more? No.
No, open your screen up full, your Zoom screen.
What? Hold on.
I'll do it for you. There you go. Now you can go ahead and share your new document.
You know, I'm not finding the document that, does this scroll down, Jennifer?
You've got to find the tab, or you have to click on share screen. Are you doing that?
I didn't get rid of that. Okay, so what if I,
You click on share screen at the bottom.
have you guys seen my screen? The
No.
Form T?
No, you
Okay.
have to reshare your screen.
All right,
So at the bottom of your video screen, you click on share screen,
right.
and then you find the Form T.
Okay, here we go. Here we go. All right, I'm okay, folks. Sorry for that. Anyway, a Form T, as you can see by this, I created an Excel spreadsheet that looks exactly like the IRS form. IRS forms are not interactive. You fill in the blanks, you do your addition, they're just form fillable. This particular one is a relatively simple Excel spreadsheet. I made it look like the IRS form, which helps. And I did the math, you know, all the formulas that are necessary, all the details. So remember that this isn't required, but as you'll see when we're done, it does do a fairly accurate job. I think that if you're going to be making multiple timber sales, not necessarily every year, instead of a one-time sale, it could be pretty worthwhile for you. And as you can see, they just want the name. Where is it? When was the sale? How much did you get on this line 37? And this was a number that should match the 1099-S. And so you have the ability, that's on the profit and loss side. If we go all the way back to what I call an allocation sheet, this is the most difficult part of it. So this Smith property, in this particular case, we had an inventory. It's not always done concurrent with the acquisition, but you're able to get an inventory and perhaps grow it back to the time of acquisition. There can be a big difference if you've held it for a long time. In this case, Jeff Williams at Maine Forest Management allowed me to use this taxpayer who became a client of mine. Jeff had done an inventory, okay? He did it in 2011, the acquisition was then. And you can see, he also gave me what he believed was the appropriate stumpage price for the kinds of species and products that existed. In this case, there was saw timber, different types of saw timber, some volumes, some prices, and what he considered the fair market value of the standing timber. That's not you generally don't realize that if you were going to sell this property, because you can't cut all that timber, but that's the retail value of the standing timber. And then he also had estimates of the cordwood, the pulp, and so forth. And if you look to the right, one of the things that I had to do is that I had to convert. He had 3 stands on this property, 3 different types of timber stand. So I had to combine them correctly in order to put this summary together over here. Once again, the real advantage of having an Excel spreadsheet is if you know how to use it, it makes life a lot simpler. And so I was able to get the information from this inventory. Not all inventories are this detailed. This particular scenario I'm talking about, I'll call it a medium to specialized situation where we have all sorts of information that can really refine this to something accurate. There are circumstances where you don't have this inventory and you don't have stumpage prices and you had no idea what you paid for timber or anything else. So anyway, this allowed me to have a timber volume for a starting point. Okay, as we move down, you can see where I allocated the purchase price. The purchase price was $193,000, if you can see that. I hope it's clear enough. So I had to allocate the total purchase price amongst the assets. In this particular case, it was just timber and land. It was saw timber, and I called it cordwood. And those numbers, if you can read my screen, all I had to do was say that I want the volume of saw timber in this spot. It goes up here and right here, and places it here. So once you know how to use a spreadsheet, this works well. I think it's also important to remember this particular part of this one wasn't as difficult because I didn't have any buildings. I didn't have any shore frontage. I didn't have, it's a woodlot, and it made it a lot easier. So, and as you can see, that valuation right there, 2011, if you divide that valuation by the number of 1,000 board feet, you can get how much cost you have in it per 1,000 board feet or per cord. In this case, $7.80 per cord. And in the timberland, what I did, generally speaking, is once I got these numbers, I knew how much they paid, so I subtracted the timber value from the total price and got a price for land. This was a 62-acre lot, and I divided 124,000 by 62 and got $2,000 an acre. This was in extreme southern Maine, so that's sometimes this works. However, that's fair market value, but they didn't pay fair market value. They paid $157,000, and so I compared $157,000 to the total fair market value, and I got 81%. So they paid less than fair market value. So then I just applied that 81% against the numbers I came up with. These represent 81% and came up with a purchase price. Many times we don't know what the fair market value is. This particular case, I was able to do it. Sometimes, this 157,000 is the key piece, because that was the total price paid, plus any, as you'll see on another page. I also have here, fortunately, the Forester had a detailed summary of what was sold. In addition to a 1099-S, he had a very detailed accounting of what they sold and how much, what they paid for it, and what he had for income. So that this 16,000 and 16,667 was the gross purchase price, gross proceeds. As it turns out, Mr. Williams assists the loggers and assists the landowners. He had a $2,004 commission. So what he ended up doing on behalf of the logger, he gave the taxpayer a 1099 that was net of his commission. That's generally not how the IRS likes for it, but as long as it's clearly stated, it's probably going to work. So one of the things I had to do with all of this stuff was convert it, the logs and the pulpwood, combine it in the sale. So now I knew that there was 47,000 board feet sold, and there were 757 ton cords, and that's going to be transferred later on when we get to determining profit or loss. So the Form T itself starts right here. That was a worksheet that it's good proof for the IRS or anyone else as to what you did, down the road. The purchase was in 2011. Mr. Smith of Anytown, he paid $157,000 for the property. I'm missing a little something here. The legal expenses, I guess I might have erased that, but any legal expenses associated with this, we should be at 157,000 right there. So all of the information that's necessary here, I already did So I don't have to recompute anything. You can see up here, it tells you what I did. I went to the allocation at D46. I went to there's D46. I'm sorry, I said 36. There's the number that I needed. So with spreadsheets, you can build from basic data to more detailed, and then you can, if you're going to do something else, you can revert back and you can transfer it mechanically to the next sheet. So my job here on the IRS form, this is kind of a repeat of what you saw earlier, is to come up with that total purchase price of $157,000. So once I've done that, we're able to go to a depletion schedule. This is kind of it's a record keeping thing for saw logs and for pulp, see here. And I go back and pick those numbers off the prior spreadsheet, what my total cost and total basis was. And if you divide your total cost by your total volume, you get a depletion rate, which is this right here, $105. I had to add some growth from 2011 to the date of sale at 2% a year. No new costs were associated. And then this amount cut, if you can see up here, all I had to do was reference the allocation page on the sale. It was 47,000 board feet cut, and multiply it by the per unit rate, and that's my depletion right there. So I take a starting basis, which is up here. I subtract that 6,400, and I get 4,500 at the end of the year. And that would be my starting balance for the next year or the next time I cut. And it works the same way. I could have done this all in one. I could have converted everything to tons or cords, and I'd have to make some conversions. So the last step in determining that profit, once again, this part is, real important, is, again, it's part 3. Smith, Anytown, data sale was 22. And this 16,677 was from a 1099 by Maine Forest Management. And so I know I'm starting at the right place, except that I'm not going to have any commission to deduct at the end, because this is a net. I had to dig around to make sure. Otherwise, it would have been double dipping. So, my sales price, and I'm going to subtract what I already determined on that depletion schedule right here and right here. This is my cost basis in the timber sale. I add that up here, and I subtract that cost basis from the total sales price, and I get the capital gain. And this information, and this information will go on a Schedule D, capital gains reporting. Your accountant or you will be able to simply take this and transcribe it. So this is fairly detailed and but it's a permanent record. Next, you don't have to do anything. The next time you make a timber sale, normally I add one of these that where the starting numbers are from here are the beginning numbers on the next year or the next time you cut. And you go through the same process, you already know what your depletion units are. They're going to be a little different because you've subtracted some. So I'm going to stop share. And I'm going to share another file, which I call a simplified detailed. Is my assistant here?
Yes.
Oh, okay.
Are you having trouble?
Yeah, I'm missing. I think that I need, oh, okay, here we go. I just needed to scroll. I'm sorry. All right. Okay, now I'm going to show you a simplified process. With this process in particular, I like to put a summary together. So you or the IRS or your preparer knows what kind of assumptions I had to make or what I used for data, okay? And I generally do this with all of them, but I would recommend you do it. Every time you, even if you're guessing, if you tell the IRS, I don't know what it was, but this is what I used and this is why I did it. So this particular property is actually a close friend of mine. And I just finished it. He acquired property in 1986 for $75,000. There wasn't a personal residence. He had no timber inventory. So he was just competing with the market. He's a PhD biologist, but he doesn't know an awful lot about forestry. So he gave me his timber sale details, a company called Maine Custom Woodlands. And he had sales, he had income in 2021 and 2022. However, all the harvesting occurred in 2021. Some of the payments in 2021, and then the final payments in 2022. So he's a cash-based taxpayer, not a, and so here, everything is, the timing is when you actually got the money. So I'm looking at a 22, I did a 2021 similarly, but I'm looking at him getting a payment in 2022. He cut some wood in 2007, had some cut. It was a small timber harvest, and he did not claim any cost basis. So that he had his full amount. He didn't do an allocation because of no timber inventory. And, you know, I made the judgment that he wasn't getting so much money that we couldn't try to use some common sense and realistic assumptions. So I created a spreadsheet where I looked at stumpage prices in 86 and in 2021-22 to estimate the relationship between these products. And I'm going to actually show you that. I got stumpage prices from the Maine Forest Service, which has good historical records. They have current and relatively current, as well as historical. I applied that relationship to the bulk of his products were pine logs, pine pallets and red pine logs. I applied that relationship to this so that in 2022 1099 minus the 86 prices that I had would give me a determination of the capital gain. There was no real estate appraisal in 86, and there was no timber inventory, and one has never been done. I don't do timber inventories. So I'm going to stop share again. Okay, this is the extent of my worksheets. As I told you before, these are the predominantly what he sold. Red pine, it was a red pine plantation and a white pine plantation from quite a while ago. And, you know, so he sold pallet logs and regular logs. He sold very little chips and pulpwood. So in 2022, he got these amounts, roughly he got $18,000 in total income. And that is supported by a 1099-S from Maine Custom Woodlands. And that's my starting point. In 2022, he got $50 $1,000, $170 $1,000, and $45 $1,000. In 1986, I went and got the prices. Lo and behold, the prices in 1986 for red pine logs was higher than it is current. You know, market prices for wood products, it's not a linear relationship. And you can see the prices I got for 86, and I've determined the relationship between, I divided 86 by 2022, and I got a fraction. You know, and as you can see, then I applied that fraction against his total price to get his 86 cost basis. So as you can see, when it came to red pine logs, he actually lost money. He didn't know he lost it. You know, he didn't go into it knowing, unlike somebody who buys stocks and so forth. But so his cost basis, I added those up, his cost basis was $10,198. Compare that with his sales price, he had a difference of little over $8,000. That became his capital gain. Now, it's important to remember that he clearly had sufficient cost basis in timber to be able to claim cost basis. He just didn't know how much. And quite frankly, I might have been able to go get a timber inventory and grow it back, or I might have done some real guessing as to what the timber inventory was in 1986. But I think the IRS is going to, well, I know they are, as long as that's the case, that he had basis. No further harvests are planned. He took a lot of the logs, and that there was sufficient basis that remained. As you remember, I told you how much he paid for the property. He ended up building a house on the property and cut firewood off and on. So he's going to take this form and the explanation I gave him to his tax preparer, and his capital gain is going to be $8,000 as opposed to 18. So by performing this process, we reduced his gain from 18,000 to 8,000, $10,000 that, if you didn't go through this process, I don't know, it took me probably 2 or 3 hours. It was well worth. I wish he had paid me, but he's a friend, and but this was meaningful, and it doesn't even have to be this complicated. We could have had one product or one price. I could have done some guessing. Doing any more, though, if I hadn't been his friend, he would have had to pay potentially for an inventory. He would have had to have a lot more costs than it would be worth. And the question to the IRS, say this had been a $6,000 or $7,000 timber sale, it may have been prohibitive for him to get professional help, forestry help, that is, to perform this process, but it tends to be worth it. Remember that these documents that I'm showing you vary greatly depending on the taxpayer, if you chose to do something like this. Jennifer is going to post them on the Maine Woodland Owners website. Everything that you've seen today will be on there. So I use templates. I mean, I'll take this, and the next client or the next time I do it, I may, relabel material, recalculate, but the process is generally the same. This one would be even, and it's the same with the Form T Excel spreadsheet. You could actually take that Excel spreadsheet, and if you don't use Excel, you could do the math yourself. I'm going to stop share, and then I'm going to share screen. I think. I wanted to show you the Maine Forest Service puts out, this happens to be for 2020. It's hard for them to gather all the stumpage information from you folks to put all this together. Sometimes it takes almost 2 years, but they have stumpage information for each county and groups of counties. And if you look at, for instance, let's look at Kennebec, Knox, Lincoln, and Waldo counties. This is where I got my information for. I used in the case we had 1986. But this is really helpful information. And generally speaking, if you filed an intent to cut, and you actually, you may have provided results from some of your sales to the Maine Forest Service. As you can see, your name's not mentioned, but the number of, they use it for a very, very important reason. And I certainly use it on a pretty regular basis. Let's see, what else did I want to show you? Oh, here we go. This is the Maine Forest Service conversion table. And what you can see are how to convert spruce fir and cords to tons, 2.1 tons per cord, otherwise 4,200 pounds. A white oak, one cord of white oak is 2.7 tons or 5,400 pounds. And you all know the difference, hardwood and softwood weights, significant. So there are tools like this out there that we can use, especially if you wanted to make it simple and just convert everything to one common denominator, like tons. And you would convert the volume and the price per volume in tons and price per ton by using these conversions. Well, let's see. I guess for the most part, that's what I wanted to share. Are there any questions? We're whittled down to just a few of us. So I assume that at least some of you, I obviously know Richard quite well. He described his, but is anybody else in the process of reporting a timber sale for this year, for 2022? All right, so we won't need to decide. You can decide yourself whether you want to employ some of this techniques or employ me to in fact create some original documents and assist with the reporting. So we're getting real close to it. So if there are no more questions, I'll probably sign off, but Richard, do you have anything you want to add?
I do. I want to go back to my steel bridge, Jim. Does it have, since the federal government helped pay for it,
Yeah.
does it have any tax? I mean, what's the future for this bridge? It becomes an asset, right? A capital asset that I didn't pay for. So
That's
what
right. And you can only capitalize if you don't exclude that money they gave you from income.
Which I think I did.
You can't ever write it off. I don't know how much money was out of your pocket. I won't ask that question in front of everybody else, but any money you got, I won't say for free, but if you excluded it from income, you certainly can't exclude it. You certainly can't add it to a cost basis and try to claim depreciation on it, and certainly can't go into your cost basis that you recover if you ever sell the property, including the bridge.
I eventually, I imagine it becomes part of, it goes to my son, I guess. So it kind of disappears. The whole value of the bridge and that whole project just kind of becomes history, I guess, right?
Well, it depends on whether you give it to your son or he inherits it.
He's going to inherit it probably.
Okay, so if he inherits it, the value as of the date of your demise, that bridge is worth something.
Yeah.
And it's important to make sure that the value of that bridge is not included in the fair market value of everything else, the timber in particular, because your cost basis in timber and in land, his cost basis is going to be bumped up to the date of your demise, as I said earlier. That's called stepping up the basis, and that so that if that happens, and he makes the sale the following year or shortly after, his cost basis is going to be almost equal to what the sales price would be, all things considered.
Right.
So if you gave it to him, he would get your cost basis, and the difference between a sales price of timber and your price, your value in timber would be much greater.
Thank you. Big help.
Okay. So I guess with that, I will I'll shut this thing down if I can do it right. I think I just hit the end button, and I hope it was worthwhile. And like I said, this information is all on the Maine Woodland Owners website. We'll see you later, Richard.